Welcome back. You're watching First Trades on ET now, and let's move on and talk a bit more about the numbers of Samvardhana Motherson. They reported the numbers, and what you look at it in terms of the numbers that came in this time around. Revenue, yes, saw a bit of a growth. Margin saw an improvement. But to talk more about that, we're joined by the management of the company. We have Pankaj Mittal, Chief Operating Officer of the company, as well as Mr. Kunal Malani, CFO at the company, joining in with us. Very good morning, gentlemen, and thank you so much for joining in with us. And Kunal, I want to start with you in terms of the margins. We're quite great this time. Could you talk to us about the factors that were at play for the margins? Any one-off impact that was there only for Q4, or will we see these margins sustained going forward?
So, number one, I don't know why everyone was surprised, but I think we've been talking about this for some time. We've been talking about all the efforts that we're doing, our discussions with the customer. We've spoken every quarter about how we said we will be improving every quarter, and frankly, that's the delivery that you're seeing now. We've also highlighted some of the one-offs that are there. We have seen in this quarter we have announced a one-off of around about 200 odd crores of compensation that we have received from the customer. Previous quarter, if you notice, we had incurred a large loss on account of the steep forex devaluation that happened in Argentina, where from about 300 odd it went to 800 odd. And that meant we had to work with the customer to find an amicable solution, and that's the outcome of it. So that's one. Two, this quarter, because of the improved performance as well as the international restructuring that we have done, it's enabled us to recognize some of the deferred tax assets on our past tax losses. That's around about 230 odd crores, which we've also highlighted for this particular quarter. Having said so, I think from a margin perspective, we've always said that we should be improving, and I would urge that everyone looks at it from an year basis rather than this quarter only, because every quarter has its own nuances, and hence on an annual basis, it possibly gives a better picture on how the improvement trajectory is. And as we've always said again and again, we are not a margin-oriented company. We are more an ROC-focused company, and again, very happy to report that from an ROC perspective, we've actually moved to 17 odd percent from 11 odd percent last year.
Okay, yes, return metrics have definitely been improving. But Kunal, how are you assessing the growth outlook in the end markets at the moment?
If you look at the overall market as well, it hits 90 odd million vehicles, which is pretty much in and around the pre-COVID levels. But the moment you break it down by region, you would see that Europe and Americas are still 10-15% below pre-COVID, and India and China has actually ramped up much better than even beyond the pre-COVID level. So there is some amount of regional differences that exist. Two, when you think from some of the EVs versus hybrids construct, I think while obviously they are gaining share, I think the pace of growth has reduced specifically in EVs. We've highlighted that in our presentation as well. Obviously, I think the expectations of EV pretty much galloping across has been more muted and more measured now. Hybrids are actually started taking a little bit more share, and that's the change that we are seeing, at least in some parts of the world. From our perspective, we are a powertrain agnostic player, so it really does not matter which powertrain is being sold. So we are very happy with the way it's getting played out, because we do have a very large ICE pipeline as well. But having said so, EVs and hybrids does help add content to it. So we're happy to see the penetration also increase in these areas. And then from a premiumization perspective, I think we continue to see SUVs being the staple diet. I think it's hitting closer to the 50% levels, pretty much most parts of the world. And the pace of premiumization or the delta in premiumization, again, in the emerging markets is a lot more in places like India. China is a lot more than in many other developed parts of the world.
Right, Pankaj, if you could lastly just tell us about the JV with BIL Crystal that you have announced. Any update on that with respect to the investment capacity, and by when will this be operational?
Some of these things are at the moment confidential. There are NDAs, so we can't talk much about it. And as you mentioned, that out of the capex, about 70% of it, the growth capex is going into the non-automotive side, which includes this capex as well. So, as well as our capex on aerospace and health vertical. So, I'm sorry, we can't give too much details about this venture as of now.
Worries. We'll wait by to get more details from that. But thanks, Kunal, as well as Pankaj, for making time and speaking with us today. Time now to take a breather on the show. Don't go anywhere. Lots lined up when we come back.